Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're doing episode 2 of Stock Market Battle, where I battle two stocks against each other that are in a very similar industry. So today we're taking Apple, and we're battling against Google, and we're going to see who is the winner. I'm taking 7 different categories to compare these two on, and we'll see which one gets the most points out of those 7 categories, the 7 categories that I judge the highest as far as investments in the technology sector. Now, before I get into this, guys, please leave me a thumbs up if you enjoy this new series, and also leave me a comment on what 2 stocks you would love to see me battle on next week's video, because this is a brand new weekly series I'll be doing every single week. Let's go ahead and get into this, guys. So the number 1 category we are talking about here is PE ratio. What PE ratio do these companies have? By the way, Apple's a huge company, $620 billion market cap. Google's a huge company, $560 billion market cap. I just want to let you guys know that so you have reference to how huge these companies are. It's absolutely ridiculous. So Apple's PE ratio is 14. That's very low in today's market, because today's market, most companies are trading at a 20 plus PE ratio. So Apple's got a very low PE here, guys, 14. Google has a PE of 29, so much higher than Apple currently. So obviously Apple wins this category. They're up 1-0 right now versus Google. We'll see how things start turning out here, but man, that's a huge difference in PE ratios. Google's PE ratio is almost double what Apple's is. That's a huge difference there. Number 2 category we are looking at here is revenue. Apple's revenue, and this is for the last quarter. We're looking at last quarter right now, the one they just reported a month or 2 ago. Apple's revenue down 9%. 9% down revenue right now for Apple versus Google, which was up 20%. 20% up revenue for Google. That is absolutely phenomenal. So you're looking at 2 companies that are in very different places right now in the currently. You know, last quarter, Apple's revenue down 9%. That's quite a bit to be down in revenue, especially when you're a big company like Apple. And then you look at Google up 20%. That is freaking phenomenal. So 2 companies that are in 2 very different places right now. So right now we're Apple 1, Google 1. So 1-1 right now, all tied up, guys. Going into category 3 here, which is looking at the net income for the most recent quarter. Net income for Apple down 23%. Absolutely huge number here, guys. To be down 23% of net income your latest quarter, that's a very bad sign. That's just a horrible number. No other way to sugarcoat it. Google, however, grew net income 26% in the latest quarter. 26% growth in net income for Google in the latest quarter. That is absolutely amazing. So this category is the most dramatic of any category we're going to look at here, guys. When you look at Apple down 23% with net income in the latest quarter, and you look at Google up 26% in the latest quarter net income, that is just like mind-blowing. So, but you only get 1 point per category, so Apple still has 1 point. Google now has 2 points. Google takes the lead. Category number 4 here, guys, we're looking at. This is actually net income for last year. So we're not just looking at the most recent quarter. We're actually looking at how did things go over the last year here. So Apple's net income last year was down 16%. So just not a good last year for Apple. And obviously it's gotten even worse this latest quarter. Google, however, was up 12%. So Google wins this category. So now we have 1 point for Apple, 3 points for Google. Google looks like it's running away with it as of right now. And obviously, something I want to point out here is Google net income was up 12% last year. But in the latest quarter, it was up 26%. So things for Google are actually getting better, it seems. At least if you're just judging off the facts, you're just judging off the latest quarter. Whereas Apple, things are actually getting worse. And this is, once again, if you're not speculating, you're just judging it off of what happened recently, things are actually getting worse for Apple because net income was down 16% last year versus being down 23% the previous year. So things are actually, or excuse me, the latest quarter down 23% in the latest quarter. So things are actually getting worse for Apple. So those are some things to take into account, but regardless, we got 1 point for Apple, 3 points for Google. Category number 5 here, guys. This is looking at the balance sheet now. This is mind-blowing. Apple has $150 billion more in cash and investments than in debt. Unbelievable, unbelievable. Google has $60 billion more in cash and investments than debt. That's phenomenal as well, but Google just got smashed on by Apple in this category. Absolutely amazing. Apple has that much more money in cash and investments than debt. So clearly Apple wins this category, so Apple has 2 points now to 3 points for Google. So Apple's on the comeback here, guys. Category number 6. This category, I added because a lot of you guys love dividends. A lot of you guys, judge dividends so heavily, and you pay attention to dividends, and if a company pays dividends and those kinds of things. So I added this category in. Apple pays a dividend yield of about 2%. Which is pretty dang good. I think their actual payout ratio is $2.28 for every share you own. So if you own 10 shares of Apple, you're going to get $22 and some change, or $23 and some change in basically money paid out to you every year in dividends. Google, you get no dividends. They do not pay out a dividend currently. So that makes 3 points for Apple, 3 points for Google, all tied up going into the last category, number 7 here, guys. So we're looking at forward PE ratio. Apple has a forward PE ratio of 11, so super low, which is a good sign because they're expected to get more profitable next year than versus what their last year was. So that's a really good sign for Apple. They need to get back on the right track. Google has a PE of 19, so that's phenomenal when you consider their old PE ratio was 29. To go from a 29 to a 19, very good sign, but they still got smashed on by Apple in this category. So we have Apple with 4, Google with 3. Apple wins the series overall, guys. And once again, this is just looking at past statistics and those kinds of things. Now, how you judge the companies in the future, that's up to you guys. That's not what this series is about. It's just about looking at past performance. But you gotta ask yourself, can Apple get back to growth? Can Apple start to grow net income again, grow revenues again? Can they get the iPhone back on track where the iPhone's back into growth? The iPhone is what's killed Apple. The iPhone growth has stopped, and Apple's just gotten killed from that. Despite services being up and a lot of other categories being up, iPhone being down, Apple's an iPhone company. Google, however, is just a growth beast overall. They're growing Google business, they're growing YouTube business, they're growing everything. They're just a growth beast right now. And you got to ask yourself, if you're going into Google, can Google keep this type of growth up or keep something close to this type of growth up? If they can, then this might be a stock that could be $1 trillion market cap in no time, guys, because they're already at $550 billion. If they can keep this type of growth up, you can see $1 trillion market cap is going to be around the corner in a few years from now, guys. So I hope you enjoyed this series today. Don't forget to leave me whatever stocks you would love to see me break down next week's video that go against each other. If you came across this video and have not subscribed yet, you may want to. We talk the stock market the most on this channel, including this series every single week. We talk business and entrepreneurship. I'm an entrepreneur. I give a lot of my entrepreneur type tips away. And then also we talk personal finance and personal finance tips on this channel. That's what this channel is about. Thank you for watching, guys, and have a great day.